Good day all. Ira Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening of Thursday. We're at the 5th of December, 2024, and what an interesting time now in the market. You know, we've been going straight up, and we're finally getting some corrections in stock indices, the metal markets, and the like. We get the jobs report tomorrow. We'll talk about that in a minute. But I do want to remind you, this is the last time you'll hear me talk about this. The Cyber Week sale ends tomorrow. That is Friday, December 6th. So when I put out my weekend update, it will have been over and I won't be talking about this. A lot of you have taken advantage of it. Good move. Complete futures, or the combo package of a morning subscriber video on the futures, which I put out at 6 a.m. I start recording it. I'm putting out and recording at 9 the ETF video, my twice daily written updates, my special updates that come out, the futures video by itself, any 1-year subscription half off, and this is the best deal you're going to have this year, I can tell you that now. And I appreciate all of you that have joined us. It's been a number of you. You just go to iraepstein.com, look on the left side of the website. It's right there. Just give it a click. It'll take you where you have to be, or move your cursor to the top. There'll be an icon. Just remember, when you go into the site, everything's defaulted to the monthly prices. Click on the toggle switch. You see it right there, and it says it. Take you to yearly, and whatever you put in your cart will show up in the cart at 50% off. That's how it will work. This is only available to new and returning subscribers. I'll have something for my existing subscribers very shortly for them. So, all right. Now, tomorrow's the big boy day, and what I mean by that is we get the November non-farm payrolls. So the market is looking anywhere between 215 to 218. The number keeps switching back and forth of new jobs compared to the prior months plus 12. We are looking at the November jobless rate at 4.2. That's up a tenth compared to the prior month. I've also seen the market a tenth lower. I've got to tell you, it's either side of this. Average hourly earnings, they're expecting up 0.3% month over month. That's what you're going to be looking at. Now, why is this so important? It's so important because it's the last piece of jobs data we're going to get before the Fed December 18th decision. Yes, we will get another part of CPI and PPI coming at us. You know that's coming. But I don't think the Fed's too worried about inflation. It's been the jobs that they're watching. We've seen some weakness out of ADP. We've seen more jobs being offered on JOLTS. But we're also seeing on that report that the average time to get a job from the time somebody loses it, averaging almost 4 months. That's quite a bit of time. It wasn't that way before. What happened today in the markets? Well, correction time. Why not? I started telling my clients yesterday to do that, and I warned everybody today. I said, don't turn a profit into a loss in the futures markets if you have one. The market's been going straight up. Often, if you look at the seasonality, you take a dip here, and then around mid-month is when the market often, I'm only giving you generalities, takes off for the Santa Claus rally. On the energy markets, it's just very, very stable. OPEC stepped in and said, hey, we're not going to increase our production numbers to the marketplace. We might produce more for our storage, but we won't be doing more to the market for 3 months. That's the whole quarter. Why? They want to solidify where the market's at. You know they have not been in agreement with one of the major energy agencies, which thinks we're going to be oversupplied, and they think Chinese demand's going to come on. Well, they're making a huge bet because nobody knows what China's going to do to get their economy going. China goes into that closed-end meeting now. In the currency markets, you're a little bit of everywhere right now. And what I mean by that is the dollar got hit today, which makes sense going into the report. You had bids in the bonds and the notes today, so you were under 4.2 in the 10-year. And the metals have gotten themselves down to interesting areas. So why don't we go there and take a look? First, in the gold market, you seem to be coming back down to see what you can do around that 26.15 area. That's the 18-week moving average of closes. This is a chart of closes only, but you can see the pattern's pretty clear here. You've got lower highs. You do have higher lows, but you have lower highs. The market stuck in this sideways pattern. It's not a bullish pattern at this point. You've now changed the pattern just from yesterday with this breakdown today. So what the market did, and this is always fascinating to watch, you know, I have a course on outside days. So here you get an outside day up. If you take out the low of this, which is Wednesday's low, today, which it did, look at that. Okay, when you do that, I just saw something on the TV that came. Lower low, higher high. Isn't that interesting? But you broke through that. So now you'd have to go back through Wednesday's high to say, I've laid a bear trap and the market's ready to go up. Otherwise, you've converted the market into a down cycle right here, and you can see where you're at tonight. Guess where this is all happening against? Remember I told you I thought you'd lay down against the 18-day average and fight a battle, as I saw it, between the 18 and the 100-day. We'll see if I'm right or wrong on that. But that's what I'm expecting right now. The Bollinger Band is staying right here in the 2586 level. If you slice through everything in a negative way, that should be a big support area. And in order to get bullish, you got to get back over Wednesday's high and close like that. Then you could say, the market's now trying to resolve back to the upside. Right here, it's a difficult son of a gun market. Momentum, which had been drifting sideways, is starting to lean down. Tonight, you're fighting to stay over at 26.56, the 18-day average at 26.54. Now remember, think of the DMZ zone between North and South Korea. It's loaded with mines and everything. Well, the DMZ zone on a chart, to me, is the 18-day average. It's absolute neutral zone. When you're over it, you have a bullish bias. When you're under it, a bearish. So you can get sell signals on the swing line, but they're countered if the market's over 26.54, which it is, and you go into a neutral status. That's pretty much what I see. When we take a look at the gold-silver ratio, again, you've been falling down. So what's happening is silver is gaining a bit on gold, which makes all the sense, because if China does anything positive to get their economy going, silver and copper should be the two recipients, not gold, silver and copper. Lower low, higher high, overbought. So you're fighting a huge battle at that upper Bollinger Band and probably not ready to do too much. In the copper, you throw in the towel if the market gets back under 417, the last break low. The market is trying to be good. It hasn't succeeded very well in doing so just yet. The resistance is right here, the upper Bollinger Band, and notice how the market gets close to it and it walks away. Now, if it can clear it, then the 430 level becomes important, as does the 436. But that's going to take, I'm telling you from my experience, China doing something to make it. The U.S. jobs report should not be the mover in that market. Let's face it, on the U.S. jobs, it's either going to make the Fed lean, it's even a better shot that they'll make their cut, which can happen anyways, just because the Fed may decide, let's give a Christmas cut, let's hold back for January and wait until the meeting after that to see what we do and where the economy's at. That is why you have a 70-some-odd% probability of that cut. Traders think that's very much in the Fed's thinking. In the platinum market, you keep running up to the 18-day average, and it's like a brick wall in the market. It's stopping it. The market is now just churning. If it can clear the highs earlier right here, well, that could set you up. But remember, I think the resistance is going to be rather formidable at 977 to 981.60, the Bollinger Band, the 100-day average. And if it drops down, 924.60 is important. But platinum often has a strong December. So it's something you want to keep your eye on to see where the market might want to go. And in the dollar, we have been fighting a battle day after day after day of hitting the 18-day average of closes instead of it staying up and over it. Today it reached down. It could easily break down to the lower Bollinger Band here, but it's oversold, and I don't think you're going to attract a lot of attention. But the bulls in the market, and our work called this, there was no reason once you lost the bullish embedded reading to stay long, and a lot of the diehards have been caught in this market. We haven't, knock on wood. We get caught on our own traps. Nothing's perfect in the trading world, as you already know. But you put it together, tomorrow's going to be the important day. I'll be looking at it really hard. I remind you, take advantage of our sale. IraEpstein.com. Go to the top left on the website. It's right there. Give it a click. It'll take you where you have to be, or move your cursor there. Last time I'm talking about it. You have a great day. I'll catch up with you all either in the other videos tonight or first thing in the morning.